Hey everyone, Logan Hertz here with Hazeltine LLC. Today, we're very excited to have a returning guest. This is Jake Bass, who is a serial entrepreneur with a lot of previous experience in the life insurance industry, and his entrepreneurial endeavors are about making, whole life insurance and permanent life insurance products in general more accessible to the average person, combating a lot of the nonsense that's out there so that people can use their permanent life insurance policy in a way that's very convenient and very accessible to the average person and very understandable to the average person. And his main product is the V card. Of course, he always has a bunch of different things he's working on, given that he's an entrepreneur. And I describe that as kind of operationalizing the infinite banking concept. What we're doing conceptually with infinite banking is we're replacing our bank account with specially designed whole life insurance policies and then running our cash flow through our own private banking system rather than through the standard banking system. And there's a whole host of benefits around that. And Jake and his company are trying to kind of operationalize that and make it a lot more of a smooth, convenient experience and provide the education also to the average person who oftentimes either doesn't know what whole life insurance is or is prejudiced against it because of a lot of the misinformation that's out there. So, Jake, glad to have you with us again. How are you doing?
Hey, I'm doing great, man. Thank you for having me back. I'm excited to be here talking about what we're doing. And yeah, man, I was just nodding my head along with so much of what you were saying there because I thought it just really um, was a great way of highlighting what we're doing and the importance of it. And we oftentimes talk about the educational piece, and I'm excited to be helping with any kind of content that can assist in that mission. So happy to be here, man.
Awesome. Awesome. So, we talked last time about the V card. I want to talk today about sort of the next evolution of the V card, which, by the way, is not yet publicly available. There's a lot of things we're still working through. So we're getting here
Right.
right at the beginning. So tell us a little bit about where are we taking the V card? What's the next evolution of the V card? And let me back up. I'm not going to assume people have watched part one of our interview. I'll link it below. You
Right.
should watch that. So just give us a quick overview of the V card and then talk about where you're taking the next evolution.
And like anything within this space, from an innovation standpoint, it takes time. There's a lot of regulatory hurdles and a lot of things that you want to make sure you get right before you offer this to people at scale. The last thing we would want is for this to fail because we just tried to push it and go a little bit too fast. So where we're at and the high level overview of what the card is, it's essentially a card that's secured by the value of a life insurance policy. And that's the card aspect. But where we're trying to go with this and what we're really trying to do is replace the way that people interact with their money at a very fundamental level. Think about it. Right now, a lot of people, most people, almost everyone in the United States deposits their paycheck into their checking account, uses their debit card or whatever mechanism they use to spend money to spend straight out of that checking account. And that money just cycles through that bank, never earns them a return, never works for them. And even money that's left in there from a depository standpoint is earning about 0.01%. There's just too many available out there for people to use to earn a return on their money that they don't even know exists. And that's what we're really trying to do. We're trying to use life insurance as the vessel because of the tax advantages and the low risk nature of the strategy and the asset class in general. We're trying to use life insurance as the vessel to really help build wealth for these people and allow their money to work as hard for them as they're working for it. So that starts with the secured card, but it really leads to an all-inclusive platform that would basically replace the checking account that you log on to right now every day to check your balance. That's what we're looking at doing.
Yeah. So today, your money goes into your Wells Fargo, your JP Morgan Chase checking account. It gives you no benefits other than convenience. And of course, we know the bank, your money, when you deposit it into your Wells Fargo checking account, you haven't actually made a deposit. You've made an unsecured loan to the bank. The bank not only takes your money and loans it out to somebody else, it also can pyramid at least $10 on top of that for every dollar you've deposited. So you're giving the bank a license to print more dollars out of thin air, which fuels inflation, which fuels all kinds of other things, right? So there's a lot of problems with the banking system and a lot of things that many people are unaware of, right? They call it a deposit, but that's pretty misleading because it's not a deposit. You're actually making a loan to the bank when you deposit, quote unquote, your money, which is not your money, into the bank. And then, of course, you don't really have control over your capital. You're not necessarily earning a return on it. And then when you use that money from your bank account, that money's now gone. And if it
Right.
was earning you anything, it's no longer earning you anything.
Exactly.
So
And
with
so
infinite
like
banking, what we're doing is we're actually giving your dollars multiple jobs. So let's say you are earning a competitive interest rate in a savings account, right? So you have money in a savings account, it's earning 4%, right? Okay. But then as soon as you start using it, it stops earning, right? As soon as you withdraw the money, it stops earning. Whereas with money in a whole life insurance policy, it's earning for you. But because we can borrow against it using a policy loan, we can now use those dollars twice. So we spend the money, we invest the money, we use it however we're planning to use it via a policy loan. Meanwhile, we're still earning that return in the policy. That return is tax free, not to mention all the other benefits that life insurance is giving us, the permanent death benefit protection. Okay. There's
yeah,
creditor protection. Your cash value is protected in many ways from creditors. There's long-term care protection, right? There's a whole host of other benefits you're getting. So that return you're earning on your cash value is not the only benefit that you're getting. And what you're doing, Jake, is you're kind of operationalizing it so that people don't have to like put money in their bank account, then
right,
take the money from their bank account and pay a premium into a whole life insurance policy, right?
right,
And then every time they're using the money in their whole life insurance policy, they're kind of having to go back into the standard banking system, at least temporarily, where they take out that policy loan. They put it back into a Wells Fargo bank account so they can then spend it or invest it or whatever they were going to do. What you're trying to do is take that the next step. So we have other products, other institutions in place so you can actually do this on an operational level, right?
right, right. And and a lot of it's the opportunities created with the technology and just the access to information that we have today that we didn't before. When you think about it, the 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 way we're able to verify both ownership and value of assets in today's world really opens a plethora of opportunity for products like this to work. The reason the process right now is and requires a lot of human interaction is because you're having to take a loan against your money from the entity that actually has the money working for them in an account or working for you in an account. What we're doing is basically saying, okay, we can verify that asset and its value, and we're going to give you a card and forget about the interest rate of the card because it is a secured credit card, but it doesn't really matter because at the end of every month, you're going to take a policy loan to basically pay that card's balance so that you're avoiding the interest rate that we would have to put on it as a secured credit card. Whatever you're paying on your policy loan, that's the interest rate. And yeah, you can either pay that off at your convenience or just depending on how seasoned your policy is and how much you've leveraged it before, you can just let that ride. It's really up to you at that point. The management becomes more up to the user. But by creating a unified digital platform that links all this information together, where a user can get on there and look at it all in real time and assess it and understand it, it makes the entire concept a little bit more understandable because this is, let's be honest, this is something that since the 1980s has been pushed and utilized to create massive amounts of wealth for people that's lasted generations. And the only reason that it's not really universally utilized or implemented is because of the complexity of it and the general understanding of personal finance that it takes to really get the grasp of what's going on. I think that what we're doing at one of the biggest things we're doing is we're providing unbiased financial literacy. It's not product driven, that's user driven. We don't get a commission off of any of the policies that we'll be selling. We are not the insurance company. We are not the insurance agency. We are people just trying to operationalize a system to best benefit the end user so that they can possibly beat the rate of inflation. Because if we're being honest, wage right now, every product out there that's designed to help consumers quote unquote get out of debt or quote unquote have some flexibility or consolidate debts and pay less, every one of them is designed to do one thing fundamentally, and that's to kick the debt down the road in hopes that wage increases outpace the increases in cost of living. That's not going to happen. Wages are stagnant, and cost of living and inflation. is through the roof. So that's a pipe dream at best. All we're doing with debt right now, from a consumer standpoint, is blowing a humongous bubble. And when it pops, the people who are going to suffer are the people who can't afford to suffer because they're just trying to keep their light bill paid. We believe that by using life insurance as the vessel and combining it with this platform that explains it a little bit better and concepts like the infinite banking concepts and velocity banking and everything else that utilizes your money in two places at once, we can possibly deflate this bubble before it pops and really restore power and strength within the middle class. I, I hope that kind of makes sense. One of
Yeah.
those things where it's just really, there's a lot of passion behind the mission and we're driven by the success of people.
Yeah, there's an enormous psychological benefit to this. There's an enormous benefit to the control that the infinite banking concept gives you. Some people put together a lot of scenarios and illustrate how powerful the infinite banking concept can be. And they show the numbers, and the numbers are very impressive when you look at, hey, if you self finance a lot of these things that you're doing, it'll end up better for you. You're adding a profit center that wasn't there before. So now you're able to make money in ways that you were not before without changing anything that you're doing. So now you're making, instead of letting the bank earn that profit off of you, you've now reclaimed that for yourself. And that's huge. But I think there's a massive psychological benefit to it. And in my opinion, the intangible psychological benefit of infinite banking and velocity banking, but we're talking more about infinite banking in particular here, is that it encourages the right behavior. A lot of times people will compare infinite banking to other things. I think infinite banking still looks better. But the problem with those other things is it requires an enormous amount of psychological discipline, control, mental fortitude to do it like you're a robot and try to mimic
Right.
what's going on with infinite banking. And you could put that on a spreadsheet, but are people actually going to be able to do that? Whereas with a whole life insurance policy, when you pay a premium into your whole life insurance policy, you have permanently captured those dollars inside your personal economy where they will never escape, and they will keep earning for you from now until the day you die.
Right.
And you don't, in the long run, you don't give up liquidity because you can use those dollars without interrupting the earning of those dollars.
Exactly.
If you're doing it the standard way and using a single use mechanism like a 401k or mutual funds, or even just a standard savings account, you have to experience the pain of locking those dollars away somewhere and not touching them, right?
Right.
And invariably, what happens is people do touch them, right? Or they don't
And then
save
they're
in the first place,
penalized.
right? And so it works against human psychology, and it's very challenging. And then the other aspect, intangible aspect of life insurance, is how it gives you control. Once you have control over the banking function, that control is more important than the return that you're going to get or the additional financial benefits you get. Or I would argue those financial benefits all flow from the fact that you now have control over the
Freedom.
banking function, right?
No, I agree 100%. It's all about most problems and most issues. You talk about the psychological aspect of it and having control. The control that you gain, it just opens the door for other opportunities that you might miss from being in a mental state of playing catch up and depression and having to always be looking over your shoulder. It's a worry that so many Americans are facing even right now. And if if that level, imagine how opportunistic the economy and world would look if everybody had that control that you're speaking of. If everybody had that, had broke free of this banking system that's basically designed to keep them indebted. Let's be honest. That a bank makes their money off of what people being indebted to them, and having the majority of the people who make up the strongest economy in the world indebted to you makes you a pretty powerful world entity. So if I'm a bank, there's not a chance that I want these people to not be in debt to me. So if we're able to break free from that and really get outside that and, use banks the way they were intended to be used, which really almost makes them obsolete with technology, I think that people are going to realize that, look, we can do this. We can literally be our own, what you say, personal economy. We can literally be our own retirement account. We can literally live our lives earning money off of our money, being able to create opportunity with it at the same time through liquidity like policy loans. I'm just excited for what the world looks like if we can get there. That's the big if though, man. There's just so many things that have to happen right.
Yeah. Well, the beauty of it is it's very doable and it's a personal choice. I don't know if the American people en masse don't decide to do this, you at least as an individual can decide to do this. And it
Right.
is interesting to point out that whole life insurance was considered a bedrock savings vehicle up until the mid 1960s. And your average American household had whole life insurance. And and then some cultural changes and an aggressive Wall Street marketing campaign then moved people away from the bedrock of whole life insurance into other riskier assets like mutual funds, and then eventually retirement accounts were created and all that, which are all these vehicles are relatively new, whereas whole life insurance is a much more traditional vehicle. It's been around for 200 years.
It's
But
true.
tell us a little bit about the actual where you're going with the V product. What's it gonna look like? Like, what's the roadmap?
Okay. All right. Yeah. No, that's a fair question. So operationally, when you think about it, it's not going to look, feel, or act much different than your current digital checking account. When a user comes on board, they're going to be educated on the vehicle that's being used to help earn a return on their money. But it's gonna look and feel a lot more like a checking account than an insurance product. And that's because we feel like the biggest barrier to entry and hurdle to overcome when implementing this infinite banking concept as a full-fledged strategy and then trying to scale it will be overcoming the hurdle that is the insurance thing. Let's put skunks on the table, man. We all know life insurance is great here in this between you and I, but it's not a fun topic to talk about because most people don't understand the power of it. They think of it as something that you get after you pass away. We're not, we don't have a line of people lined up to talk about that today. And so I think that, getting them educated on how it works, but having it function like something that's very familiar is going to be very key. So imagine you having an experience like this. You decide that you want to do this, right? You've researched us and our strategy and how it works, and you come on and you sign up. The first thing that's going to happen is we're going to get you applied. It's a single application process, both for the account with us, the account that's going to be the intermediary where the money flows to and gets withdrawn by the carrier from. And then, of course, the insurance application. It's an all in one application for the user experience that all gets behind the scenes, everything gets executed properly. We have an agent of record, a great insurance agency and brokerage called White Swan that we're partnering with early on. They've got an awesome digital user experience, and we're baking that into our application process. When you apply for an account with us, you're applying for a depository with us and a life insurance policy with our carrier partners. Now, once you've gotten approved on both of those things, which is probably, I'm not gonna lie, that's gonna be the most friction in the process because as we know, it's gonna take somewhere between 14 and 21 days, more than likely. Once you're approved, what'll happen is we actually season that policy. We season that policy for you with as much as we're legally allowed to without it becoming a Mac. And then from that point forward, you're going to deposit your money and it's going to be used to pay the premiums from then on out, annual premium structure. So like you'll deposit it with us. We have a banking partner that it's going to sit with and it'll go as soon as it can be pumped into your policy without it avoiding a MEC, it gets pumped into your policy. On the backside of that, you're going to have a card with us and that card is going to give you access to every paycheck, the full amount every time. And like I said, a lot of this happens behind the scenes and we think a lot of pure infinite banking concept people may not like the idea of that because it seems like we're trying to take control of it. But look, man, if we got to introduce these things to people in baby steps, and if we can introduce it as a place, as a tax efficient way to grow your money that allows you all the flexibility that you've come accustomed to with your checking account, and that's what resonates with people, and that's how we can. Once we've got them in the door, then we can start educating them about, hey, you can do this, you can do this, we can provide you this option. But right now, the function of it's going to be we give you a card you spend on that card just like you would your monthly paycheck. It's never going to accrue interest from us. On the backside of that, we're going to take policy loans to pay that balance off each month. And because we've pre-funded it, because we've seasoned it, this is what really makes it all work. We season it so the return is going to be a lot larger than your paycheck coming in. Sorry, not maybe not larger than your paycheck coming in, but the return is going to be a lot more
Yeah,
than the
yeah,
policy
yeah.
loan we're having to take. And
No,
so
that's
that's what makes
amazing
it work. But
that you see that.
because we pre-fund it, we're not going to do that for everybody. Obviously, if you have a 401k that you can roll over from an old job and season it, that's great. If you have, if Uncle Joe left you 100 grand inheritance, that's great. Use that to season it. But it is a way to remove I think the barrier that is financial. I guess the barrier to entry for that infinite banking concept is really educational on one side, and then having the finances already there to execute it on a high level. If we can remove that barrier in exchange for contractual ownership until we're paid off plus a finance charge and get you as a customer using our card, it's a win for everybody involved, including the carrier, because it helps them really manage their long-term asset liability management. If they're able to pay this death benefit out over time because you're leveraging that policy instead of having to pay you $18 million when you die, that's a win. And yeah, we really think that we found a solution that benefits the entire ecosystem, and that's how it would operate. Sorry, I meant to stay high level, but I got into the details there. I hope it wasn't too much.
Yeah, of seasoning the policy is something we'll have to talk about later. Because as I oftentimes say, the most important element in a whole life insurance policy is the passage of time. So the
It does, yeah, it
drawback
doesn't
to
work
the
without a seasoned policy. It doesn't work. I mean,
right. So the
right,
drawback to infinite banking and whole life insurance generally is that it is a long range strategy. You're going to give up some liquidity. The costs in the policy are front loaded. So in the
right.
early years, that's where most of the cost is. So that's phenomenal if you've addressed that. But it's kind of like I would compare it to velocity banking in the sense that when you replace your mortgage with a first lien HELOC, there is a fully automated solution out there. It didn't used to be there, now it's there. So if you take on a first lien HELOC with, let's say, First Savings Bank, which is one of the lenders that I work, they give you a checking account that automatically linked to your HELOC. And so you don't have to change anything you're doing. All you do is just replace your current bank account with this new bank account with First Savings Bank. And then all the whole velocity banking process happens on the back end without you doing anything. So without you changing anything, your home balance just magically gets paid down. Your money's working for you 24/7, right? And so it's
Genius.
fully automated. There's a
Yeah,
huge benefit to that full automation. And what you're doing, in my opinion, is you're trying to apply the same thing to infinite banking. So
right.
instead of using the home equity in your house, you're going to use the cash value in whole life insurance policies, right? And one of the challenges with infinite banking is, of course, it's not an automated process, right? You have to do
Right.
it manually. Still phenomenal over the long run, still totally worth it. Just like velocity banking, when you had to do it manually, was still phenomenal and totally worth it. But it becomes a lot easier psychologically when it's automated and it takes the
Right.
human error out of it, right? So same thing here. What you're doing is you're now automating it so that you won't have to consciously pay premiums into a whole life insurance policy and then take out a policy loan to finance something. You will
Exactly.
just have your money going into a bank account like normal and then have a debit card or a credit card that you're using like normal to your spending. And
Right.
everything will be automated on the back end, which is huge, right?
Massive,
So
massive, massive.
even for people who are believers in infinite banking and very advanced users of it, they probably can't get the same level of efficiency that they could with your product because everything's automated, right?
Yeah, look, the only reason somebody who's currently using the infinite banking concept shouldn't be at least highly aware of what we're doing and interested in partnering with us or using us is because they just see too much risk and they want to let time de-risk the business. But as far as an operational standpoint, the amount of time and headache we will save these people, you can't, it can't even compare, man. You can't even compare to the headache we're removing. And if you're a pure infinite banking, I guess, believer or consumer or customer, however you want to phrase it, you don't like that the fact that your paycheck gets deposited in that bank every month or every 2 weeks. You hate it actually because you
Right.
know exactly what you're doing. And that's what you mentioned earlier. You're giving that bank a loan. And so if we can eliminate these people who are already using infinite banking as a way to grow their money, store their money, manage their cash, and everything in between, if we can give these people a way to avoid having to put that money in that bank, it's a win. Really, we've just allowed them to do what they're already doing without ever even thinking about it. Here, you go to
Yeah.
work
Nelson
and
Nash
you spend
would
your
say,
money. That's it.
yeah, one of Nelson Nash's, of course, Nelson Nash was the creator, discoverer of the infinite banking concept. One of the
Right.
things he said is don't do business with banks. And of course, he had to caveat that and say, other than like a checking and a savings account, because there's a certain amount that you have to do with the bank. But
Right now.
your
And
product, we
yeah,
may get to a point where you might not have to at all, or at least it'll be greatly reduced because your money will never hit that checking account. It'll go to this
exactly.
depository institution instead, where your money's not being loaned out to somebody else. It's kind of like an escrow, right? That money is earmarked. It's your money. No bank is loaning it out or pyramiding deposits on top of or loaned on top of it, right? And so you avoid the banking system completely, which for some infinite banking purists, I think they would love it. um,
Yeah.
Obviously, we're still in the early experimental phase. We're on the edge of innovation here. This, of course, will take time to get working properly. The concept, I think, is sound. It's just taking infinite banking to the next logical step where we automate the process and we can actually avoid using the current banking system. There's one other point I wanted to bring up that I'm not sure if you're familiar with Bobby Samuelson. Bobby Samuelson is a life insurance actuary. He does a lot of thought leadership in the life insurance space, and a lot of people subscribe to his newsletter. And I've read some of his articles. I've actually had the privilege of speaking with him as well. And he talks about cash value lines of credit, which are kind of halfway, right? It's not the full V card solution. Okay. Where
Right.
basically you take your whole life insurance policy to a bank and they give you a line of credit against your whole life insurance policy and you can consolidate them all together. So it's sort of like a HELOC, a home equity line of credit, except the collateral is the cash value in your policy. And
Right.
there are advantages and disadvantages to that. One of the advantages is that oftentimes, or at some points, the interest rate the bank charges you is lower than on a policy loan. Then also there's the convenience factor, like we're talking about here, because you're not having to go and take out a policy loan. It's a line of credit. So it's much more convenient to use because you can use it like a credit card. And then and so Bobby had an article, which is behind a paywall. You have to subscribe if you want to read it, talking about cash value lines of credit and how great they are. One of the things he pointed out is that one of the reasons why they're not more prevalent and well known is because unfortunately life insurance agents have zero incentive to tell their customers about it. Right. And I think that the people who are pushing cash value lines of credit should be doing a better job of trying to incentivize life insurance agents to introduce their customers to this product because everybody wins, right? The life
Everybody.
insurance company, they win because they don't have to then spend the money on servicing a policy line. There is a cost to the
Right.
carrier doing that, right? They can kind of then outsource that to somebody else who specializes in that kind of a thing. I'm
Yeah.
getting into some inside baseball, but if you're working with a direct recognition carrier, right, your
Right.
dividend then is not reduced on those policy owners. So there can be, again, there are disadvantages too. I'm not pretending like this is the perfect solution, but
For
I
sure.
want to zero in on that point, right? Jake, how do we incentivize life insurance agents and financial professionals to introduce their customers to these products that are incredibly beneficial to them, like a cash value line of credit, like the V card, and things like as a former life insurance agent yourself, how would you do that?
Right. Let me start by giving at least from my experience as an agent, some of the problems I would see, first of all, with just the way it's structured in general, right? In my day to day. Warren Buffett has a saying, and I'm sure you know it, and it's life insurance is never bought, it's sold, right? Nobody wakes up on Tuesday and goes online searching for life insurance. So those agents got to sell it, and it's hard. You're gonna make a ton of calls, and you're not gonna make a lot of sales, and you're gonna do a lot of explaining, only to end up at a point where the person doesn't buy because they can't see the value of putting their money into something that doesn't provide any kind of instant gratification. And that's one of the biggest problems with people not being part of the infinite banking concept, having life insurance, or even being financially stable at all is technology has inherently created a society built on instant gratification. And there is no reward for the long term player anymore in most cases. So, how do we get agents? To me, the way you make an agent happy, no, the way you get an agent to endorse a product or push a product or help you introduce a product is, first off, you have to make sure that the agent understands that that it's safe for their client. All right, as fiduciaries, they are going to protect the people that they're selling to, And the last thing they want is some new flashy product that's going to wreck the relationships that they've taken the time to establish. And so that's step one, is showing them that it's safe. Step two is incentivizing them with structures that not only pay them whenever the customer gets it the first time, but pays them every time the customer uses it. For instance, one of the things we're looking at doing with our card product is any agent who has somebody with a seasoned policy who's looking to access liquidity who refers a card member to us will earn a small sliver of that interchange fee for the entire life cycle of that card. That's powerful. That provides them income that they don't even got to think about down the road. Or even like for this full financial solution for somebody who doesn't have a season policy and doesn't even have life insurance at all. It's, we're incentivizing agents because we can earn them a commission. If I'm selling three out of 100, if I have 100 meetings a month and I sell three policies, I'm feeling pretty good. I made pretty good hay that month. But guess what? If I have a solution that I can basically remove the cost of purchasing the actual policy via premium payments that affect a person's monthly budget. And if I can get them in this policy without really causing havoc or making it harder for them to live their day to day life, I'm going to close more than three. I'm probably going to close 10. So I can, if I'm an agent, I can 3x my money by introducing this product. Then I'm gonna use it, and that is how you get agents to really start pushing it. You incentivize them with structures outside the insurance policy that allow them to earn a chunk of everything that they move, and you make it easier for them to do their day to day job because they're already busy. Like I said, they're having 100 meetings a month to make those three sales, and that's a good month. So they're already busy. You can't bring them anything that's going to require a lot of their time or really throw a hiccup in their process. What you can do is provide value that makes them and their processes and selling policies easier. And that's what we're looking at doing, making it easier for them.
Yeah, so I do want to dig into a little bit because this is interesting to me how you season the policies. So the biggest drawback, the biggest obstacle to selling someone a whole life insurance policy, well, there are lots of them, but let's talk about one, which is depending on how the policy is structured. If I pay in a $10,000 premium in year one, I'm not going to have $10,000 available to me in cash value of the policy. It'll be less. It might be 5,000. It might be up to 9,500. It might be a significant percentage of it, but there's going to be a loss in liquidity in year one, no matter what. So how do you season the policy? How does that actually work such that the customer doesn't actually suffer a loss of liquidity? How does that work?
Yeah. Without getting real into the weeds here on exactly how we're conducting that, because there is a bit of a secret sauce aspect to that,
Okay. Okay. Fair enough.
obviously we
Fair
don't want
enough.
to get
Fair
too
enough.
far out there, but
Yeah.
we're
That would be
using,
huge.
we're using,
Obviously, you and I both know that's
yes,
massive. If you could
we
do
were able
that.
to
Yeah.
create a specialized derivative product that uses the actual financial markets and securitizations of debt and cash collateralizations, which is when you think about debt, think about mortgage debt, right? It's always been considered one of the most secure types of debt out there for investors to buy, right? Debt for guaranteed. Why? Because it's collateralized with a home. I'd imagine debt that's collateralized with cash. It's not a home. It's not some illiquid asset. It's not some stock in some company. It's cash. And so we were able to create a product that allowed us to be, now it's not, it's been proven a little bit. But and that's the reason one of the reasons we're taking our time. Like I said, it all goes back to what we care about first is the safety and the long-term longevity of the insurance industry and the people who consume insurance products. We don't want to come in here and wreck shop. We don't consider ourselves disruptors. We're innovators. We want to take what's there and make it better. And so we're going slow, cautious, and proceeding in a way that allows us to grow fast, but also make sure that we're not doing anything that's going to cause some kind of irreversible harm to the financial industry in general or the insurance industry. And so there's some other aspects there that I won't dive into, but that's essentially how we're doing it. Because it avoids interest rate sensitivity if we were to just, let's say, fund it the traditional premium finance style. Um, then you would be subject to all kinds of interest rate sensitivity so we
Right.
had to avoid that and we were able to.
Right. Right. And the challenge with premium finance, of course, is that there's still the loss of liquidity. I mean, you're not coming out of pocket as much, but still within the policy, you don't have access to the full cash value. But
Right,
Jake,
right,
this
yeah.
has been very eye opening. We're following your product because I know there are a lot of challenges, but I think the concept behind it is 100% sound. Again, I know there's a lot of hurdles we've got to get through to actually get to implementation, execution, but I want to promote the idea, and maybe other people watching this video who can help or who have connections might be able to get in touch with you. So Jake, is there anything you want to leave our audience with in closing on your new product or life insurance in general?
Yeah, just all I say is always do your homework and use your own brain to think independently. There's a lot of people out there who will bash it, praise it, and everything in between. And when it comes down to you and your finances, I've always said a person needs to do what's best for them. But before you do anything, always just be educated and make sure that you're taking all the information in and assessing it and seeing what works best for you. Who's going to provide you the most value? Are these people using negative, derogatory words to try to push a product, or are they genuinely interested in me and my financial stability? And so that's what I would say to consumers. Always appreciate the conversations. Thank you for having me. If you want to check us out, you can go to bcard.io and pretty soon V.Finance. We're in the process of changing the way our brand is represented to the public as we look to really scale up and let this thing go into the consumer atmosphere in a big way. Like I said, things we a few more things have to be settled that only can take time in the maturation of this product. We want, like I said, safety is the biggest thing, and making sure that everything works out like we think it's going to. It's going to take a couple more months, but in 2025, we plan to have a big consumer launch that's going to allow people to hopefully start taking advantage of this infinite banking concept at full scale. And we think that the opportunity that we can create is going to be amazing. And yeah, like I said, thanks for having me on, man. Appreciate it every time and been
Thank you.
fun.
Thank you. Thank you so much for your time, Jake. We greatly appreciate it.